New income tax bill tabled in the parliament. Top 10 takeaways, but before that, let's understand why there's a new income tax bill in the first place. The Indian government has introduced a new income tax bill to replace the 1961 Act. Through this, the government aims to modernize India's tax system. The bill will feature clearer language and shorter provisions, approximately 50% less than the current act. Follows a trust first, scrutinize later approach which will empower the CBDT with greater administrative control. If passed, it will take effect from FY 2025-26. The current Income Tax Act contains 298 sections across 23 chapters. It has laws that govern personal income tax, corporate taxes, securities transaction tax, and gift tax. Let's also understand the impact on taxpayers quickly. No new taxes, focus on simplification, transparency, and ease of compliance. Clear, concise language to reduce legal complexities. This will help taxpayers understand everything without professional tax consultation. Potentially lower penalties for certain offences. Removal of irrelevant amendments for better clarity. Let's now discuss the top 10 takeaways, starting with number 1, introduction of the tax year concept. The new bill will likely introduce a unified tax year concept, eliminating confusion between the assessment year and financial year, making it easier for taxpayers to know when to file returns and pay taxes. Number 2, no change to the financial year. Despite changes to the tax system, the financial year will remain unchanged, running from April 1st to March 31st. The new law will not adopt the calendar year as the tax year. Number 3, revised section numbers. The new income tax bill will revise existing sections, making tax provisions simpler and more streamlined. For example, Section 139, which covers income tax return filing under the current Act, will likely be restructured under the new system. Number 4, no change to residency laws. The residency provisions will remain the same under the new law, despite some experts suggesting a need for change. These provisions currently classify individuals as ordinarily resident, non-ordinarily resident, and non-resident. Number 5, comprehensive nature of the bill. The new income tax bill is more comprehensive than the existing Act, expanding to 23 chapters, 536 sections, and 16 schedules. This reflects a more structured approach to tax administration, including modern compliance mechanisms. Number 6, simplified tax language. The new bill removes complex explanations and provisions, replacing them with simpler language. It consolidates deductions such as standard deductions and gratuity under one section, improving clarity. Depreciation calculation for businesses will also be simplified. Number 7, simplified TDS compliance. The TDS sections have been consolidated under one clause for easier understanding. However, this may require changes to forms and utilities once the new law is implemented. Number 8, no change to tax deadlines and slabs. The new bill maintains the existing deadlines for filing returns and does not alter the income tax slabs or capital gains taxes, providing stability and certainty for taxpayers. Number 9, retention of income categories. The bill proposes no change in the classification of income under various heads. However, it will remove over 300 outdated provisions that have become redundant over time. Lastly, number 10, implementation timeline. Experts expect the new law to take effect from April 1st, 2026, meaning taxpayers will continue to follow the current Income Tax Act for FY 2025-26 and March 2026 filings. Well, that's all for today. Stay tuned to ET for more.